War, rates, and real estate. What no one else is explaining. Is the war and government chaos going to crash the housing market in 2026? Everyone's asking the same question right now. Is everything going on in the world, the war, the instability, the headlines, about to crash the housing market? Because it sure feels like it should. But here's the truth that most people aren't telling you. The market isn't crashing, it's shifting. And if you don't understand how it's shifting, you're going to make the wrong move. Let me simplify this for you. There are only three things happening right now that actually matter: interest rates, construction costs, buyer behavior. Everything else you're hearing is noise. Let's break this down so you actually understand what's going on. This is the entire game, guys. When global conflict heats up, oil prices rise. When oil prices rise, inflation follows. When inflation rises, mortgage rates go up. That's exactly what we're seeing right now. Rates have pushed back into the 6% range again, and if they creep closer to 7%, that's when the market slows down fast. Not crashes, slows. And here's what most people miss. Housing doesn't break when rates rise, it freezes. Buyers hesitate, sellers hold, and transactions drop. And that's what we're seeing. Now let's talk about supply, because this is where the crash narrative falls apart. When there's global instability, materials get more expensive, shipping costs disrupted, builders slow down. So instead of flooding the market with new homes, we get less inventory. And that's a big deal, because even if demand weakens a bit, there's still not enough homes for sale. That's why prices don't fall the way people expect. This is where things get interesting. Right now, the market is splitting into two types of buyers. Buyer one, the one waiting, watching the news, hoping prices drop. Buyer two, the one positioning. They understand something simple. Less competition creates opportunity. That's the game. Let's be real about where this is going. There are only three paths from here. If conflict escalates, rates go higher, markets slow down, prices flatten. If things stabilize, rates improve, demand comes back fast, prices move up again. And if internal instability continues, lending tightens, luxury slows first, entry level stays active. But notice something? None of these scenarios say housing crash. Now let's talk about here, because the Bay Area plays a different rules and a different game altogether. You still have high-income buyers, tech and AI money, limited inventory. So what happens? The market doesn't fall apart, it pauses, it adjusts, then it moves again. That's the pattern. So if you're trying to make a move right now, here's what actually matters. Don't react to headlines, understand the cycle, because the best opportunities don't show up when everything feels safe. They show up when things feel uncertain. If you're thinking about buying, selling, or relocating here in Northern California and you want to understand what this market actually means for your situation, reach out. I'll walk you through it step by step and would love to connect with you.